Okay, well, I might start and then people can join in, if that's okay with everyone.
Yep.
Okay, well, thank you very much for joining us this morning on the latest 3-Pipe Retail webinar. This morning we're joined by one of the UK's most successful serial retail investors. Paul Campbell has retail running through his veins, starting out as a 17-year-old market trader selling Rubik's Cubes in Ilford. Correct?
Where did you dig that out from?
I think I was in the FT. I found the FT. Paul was a board member at Pizza Express when the group was sold in 2003, and then went on to co-found the Clapham House Group, which raised 14 million on the AIM and acquired the Real Greek and Gourmet Burger Kitchen brands, amongst others, before being sold to Nando's. Paul then set up Hill Capital Partners, which received £20 million in funding from Lloyds Banking Group private equity arm LDC. And that fund is invested into various brands, including Hawksmoor, Alchemist, and Yard Sale Pizza. Paul is currently non-executive chairman at Hawksmoor and Gymbox. For everyone on the webinar this morning, there is a Zoom chat bar. If you'd like to sort of pepper this chat with some questions, which I'll try and squeeze in. If not, and you're brave enough, we can wait till the end. Entirely up to you. Good morning, Paul. How are you doing?
Yeah, very good.
Good stuff. There's a lot to talk about, but I wondered if we'd start by perhaps you giving us a quick sort of state of the nation summary of where you think we find ourselves right now before we go into more specific questions.
Well, I think the thing is, it's so unpredictable, isn't it? My businesses are 100% consumer facing. They're all either restaurant businesses or bar businesses or fitness clubs. And we rely on consumers spending money and feeling confident to do so. And clearly we've just come out of this horrendous period. Personally, I kind of feel I don't think the winter's going to be as bad as some are fearing. But, you know, nobody's really an expert. Even the experts are not particularly expert at the moment. So who knows what winter's going to bring. I'm advising all my companies to be as flexible as possible. So they've got to be prepared for anything, ranging from an unexpected recovery through to another lockdown, and therefore being nimble, being entrepreneurial, reacting fast, keeping cost bases as flexible as possible. All these things are incredibly important.
Okay. I mean, there's an awful lot to talk about, and obviously your interests are across the gym businesses as well as the restaurant sector as well. But we'll start, I guess, with the restaurants and hospitality sector. There seems to be this sort of existential crisis at the moment for more city centre-based businesses, of which, you know, restaurants tend to be more focused on city centres or have been previously. What do you think is the way back? I mean, is it purely down to government to encourage people to get back on commuting into city centres and back into work to actually for those restaurants to really recover? Or is there anything else that can be done?
Well, the acute problem for my restaurants that are in city centres is that they are the locations that carry the highest rent and the highest cost. So it's a double whammy, really. You've got that high cost base that you can only do so much about, and clearly we've got massive reduction in footfall, not just from office workers but also tourism, theatre, traffic, and I think it's one of so many problems that collateral problems that this crisis has caused, and the government clearly are playing catch up now, as they are with so many things, trying to encourage people back into city centres. I think personally, I think it will happen progressively through the winter. I don't believe the working from home thing is this sort of new thing that everybody's going to subscribe to. I think it's fraught with downside as well as upside. I mean, clearly it's incredibly convenient for middle class professionals to hang out in their gardens, but that is not the whole economy. and therefore I do believe that people will kind of come back to their offices, but I don't think it will return fully to normal until next spring. But I'm seeing, even in my city centre restaurants, I am seeing week by week higher volumes. We've had this Eat Out to Help Out thing, which has been massively helpful, and clearly a stimulus that's not going to be there any longer. So we'll get a proper picture on it over the next 6 weeks, September into October. But I'm expecting city centre volumes to build slowly through the winter. I mean, clearly all this is subject to what happens with the virus and whether there's a second surge. But as I said at the beginning, I mean, there's no signs at the moment that any second surge is going to be anything like what we saw initially.
Yeah, I mean, you mentioned city centres obviously having the highest rents, and footfall data shows it's been like local high streets that have recovered faster.
Yeah.
As we talked about. Do you think this is going to be factoring massively into future location planning, or is it our restaurants going to be sort of thinking a bit more? How long-term restaurants thinking, right?
Yeah, well, I mean, people are being careful about city. I mean, nobody's really committing to anything at the moment. Unless you're committed to something, you're certainly not committing to anything fresh at the moment. And anybody who's committed to stuff, I've got a few restaurants that we've signed up, and we are furiously retrading the deals with the landlords, particularly the things in the city centre. But, over many, many years of doing this, just when you think one thing is happening, the opposite happens. So I wouldn't bet against there being a window of opportunity to secure stuff in central London, once in a lifetime opportunities to get into iconic locations. And so at some stage I feel there will be a scramble for those opportunities. People, I mean, we saw it, didn't we? Even right at the beginning of this crisis, human nature is such that you can't stop yourself thinking about the opportunities that might be on the other side of it. And clearly people are already kind of planning for that. So I don't think it's the death of the city centre. I think you've got to be very careful about what you commit to. Places like, local market, which you said is strong. I mean, you and I both live in the same area, and we see the same thing in our local area. The cafes are full, the restaurants are full, probably fuller than we've ever seen them. But again, I wouldn't bet on that. We're in an artificial moment. This won't last forever, this set of circumstances. So you've got to be careful. My businesses have got to be careful not to go out and rush out to buy a whole load of local venues, because this local fervour won't last forever either.
I mean, you mentioned the Eat Out to Help Out scheme, which something like 65 million meals have been spent using that voucher scheme or that scheme. Obviously, there's now lobbying to continue that.
Yeah.
Even November, less so in September. Are any of your restaurants part of that campaign?
No, I think it's a terrible idea to continue it. I really do. I think it's done what it achieved, what it set out to achieve, which was a short-term stimulus for the sector, and it got people out. And somebody made the joke the other day, which I think is very true. There's nothing like getting the British public over a fear of a pandemic and giving them 10 quid off a burger. It seemed to work a treat. And it got people out and about. But that's been done now. The restaurant model doesn't work on a discounted basis. And I think we all know long lists of companies that have got themselves into a lot of trouble by discounting. So Pizza Express, a business that I was on the board of in the late 90s and early 2000s, we never discounted. We had a great product, we had great venues, we had great locations, and we had a great reputation. And after our ownership, the subsequent owners got into heavy discounting, and I don't think the business ever recovered. Its brand position, its image. I think people felt cheated if they were paying full price for the product, and I think that is disastrous for any business. So I personally think it's a mistake. I think the companies that have continued Eat Out to Help Out off their own wallet, if you like, into September are making a massive mistake. I think they're going to be addicted to discounts. Their customers are going to be addicted to discounts, and the restaurant model doesn't work that way. You can't, you've got a lot of costs flowing through a restaurant P&L, and you have to charge. If you want to serve people a good product, you've got to charge them the proper price for it. And it works if people are prepared to do that. Hawksmoor, which is one of my businesses, the thing that people say to me most about that business is, God, it was expensive, but it was bloody good. And I think that's a great thing for somebody to say about your product. I don't want people to say, I'm going to Hawksmoor because I'm getting 10 quid off.
Yeah. I'm trying to think back. Did the voucher scheme really kick in 2008, 2009? I think that's
actually a bit before. So it was after the .com crash,
Right.
when it first started coming in the sort of 03, 04, and then really viciously after 08. And you had, in particular, big chains of Italian restaurants just fighting on discounts.
Yeah.
And do you remember, I mean, it's quite amusing now, isn't it, to think it was vouchers. Do you remember people going into restaurants with a physical voucher that they'd printed off at home? And you even had, if you didn't have your voucher, the restaurant would go and print one off for you and give it to you. So that's, it's no way to run a business, is it?
No, but then so many restaurants were dependent on that voucher mechanic, I guess.
Absolutely. Yeah.
One of the things,
like a drug, really. It's
Yeah.
a dependency. It does sustain.
Yeah, but when I've worked for restaurants, the brands weren't necessarily willing to invest in their brand.
Yeah.
And the easy quick fix was to go footfall with the vouchers.
Yeah, and it works. Short term, it works. You feel good for about a month, and then you think, right, okay, what are we doing next month?
Yeah, I mean, is the reality actually that so many of these sort of chains of restaurants were sort of unprofitable anyway, or they'd overexpanded, there was cheap capital, and they've taken it as an opportunity, like a lot of businesses we know, to actually close some of the more unprofitable stores.
Absolutely. I think I would also add that a lot of them weren't very good and are still not very good. I went to one yesterday. I was out of London and we were hungry, and all we could find was one of those Italian chain restaurants. And it was appalling. I mean, it was absolutely appalling. And we live in a world where we can all buy really good food from supermarkets. We can cook nice food at home. Why would people go out and spend quite a lot of money, even with a discount, on a restaurant meal if the food is rubbish? And I think a lot of the chains that have restructured were probably heading in that direction anyway. You're right, and the crisis has just pushed them over the edge. The question is, do they all restructure again in a couple of years' time, which tends to be the pattern.
I think the interesting thing also is that I know we've got some people on the call today that are from more sort of fashion retail, and we know that restaurants are hugely important driving footfall into some of those locations. Everything's interconnected, isn't it? You can't just separate restaurants from shopping. And there's a dependency on in each of the different categories on the high street. One of the things I think is interesting that's happened over the last sort of few months has been a huge amount of innovation in restaurants, whether it's, as you talked about, Hawksmoor going a bit more DTC and subscription based. Has anything caught your eye amongst the restaurants that you know of in the way they've responded?
Yeah, I think a few things. So delivery, which clearly was a massive trend anyway, has accelerated. So a couple of my businesses are quite delivery focused anyway. So Tortilla is a burrito. It's the biggest chain of burrito restaurants in the UK, and they were already selling a lot through Deliveroo, and that has accelerated. Yard Sale Pizza, which is mainly a delivered product, and they deliver their own product. Their volumes have shot up during lockdown, and also stayed up at that level. So I think delivery, is going to continue to be a huge thing. The home food kits, I think, are very interesting. So we did that in Hawksmoor. We did that in a few other brands as well. We did something slightly different with a brand called Hickory's, which is mainly outside London. It's a barbecue business, and we did racks of ribs that you could buy from a curbside platform. This was during lockdown, and the volumes were incredible. We couldn't believe quite how much we were selling. and we will continue that afterwards. So that, it's been a frequently cited thing, isn't it? This crisis has accelerated behaviour, and it's also led to innovation, some of it which will stick after the crisis.
I think that you hit on something there in terms of, meal boxes like HelloFresh and Gusto.
Yeah.
People are becoming more used to cooking at home from scratch in a convenient way. I mean, how much do you think this is really going to nibble away at the restaurant?
I think it will, but then the restaurant industry is a huge industry, and the restructurings that we talked about, on average, and I think Yo announced the result of their CVA this morning, on average, restaurant groups are shedding about 15 to 20% of their estate. And I don't think those sites will return to restaurants. Some of them may, but the landlords are going to have to work out other uses for those sites. So we've got a huge amount of volume disappearing from the market, which going back to what you said about the sector being a bit bloated pre-crisis, needed to happen. So as with all these, there's several things happening simultaneously. There is a trend towards dine at home, there's a trend towards delivery, but there's a whole load of volume coming out of the market as well. I think people will increasingly, again, going back to the fact that people can cook good stuff at home. Why would you go out and have an average meal? I mean, some of these places that have been in business for a long time, I don't know how they've been in business for so long. The food is so average. So really the whole sector needs to, elevate to a higher level.
Yeah, and then there's this background conversation about pubs and restaurants versus schools, and I think you look at some of the local outbreaks of COVID, they have been linked to a lot of pubs and restaurants. So, I mean, how it seems to be quite inconsistent the way that a lot of the companies are approaching, clientele management, looking after them, keeping them safe. And
yeah, I mean, I'd probably disagree with what you just said. I think the media coverage implies that restaurants and pubs are a risky area, but actually, I think it's quite a small number of pubs that have been directly linked with outbreaks or mini outbreaks. Tim Martin at Wetherspoons has been very vocal about this, taking on one of the many sage scientists who, casually talked about pubs and restaurants versus schools. And all I can say is that across my estate of interests, which is quite a big estate, we've had and I'm touching a lot of wood here, a very, very small number of cases, which is pretty extraordinary when you think about the fact that there's thousands and thousands of people passing through those restaurants and bars every day, and thankfully a very, very small number of cases amongst staff. I mean, I would say this, wouldn't I? But I think it's ridiculous to even contemplate closing any bit of the economy, let alone restaurants and bars. Again, I just think that ship has sailed, and it would be self-harm of an extreme nature if the British government got into that again. There has to be better ways now of managing this problem.
Yeah, amongst all the doom and gloom of restaurants shedding some of their staff, I saw that the Ramsay Group announced last week that they plan to open 50 restaurants. So, what do they know that we don't?
Well, they're ambitious people. They got some funding last year from an American private equity fund who've got very deep pockets, and they probably smell an opportunity. And Gordon Ramsay is himself, pretty balanced in terms of his exposure. He's clearly got his restaurant industry exposure, but he's got his media interests, which I think perform very well. So he's in a position to look at the rebound phase of this.
We've had a question from Al, who clearly knows you're a West Ham fan.
Oh, really? Wow.
Congratulates you for staying up last season. Questions about innovation in restaurants and what do you expect? I mean, there's been a lot of movement towards like more cashless, frictionless transactions, but from an in-store perspective or in-restaurant perspective, what do you see emerging actually in the environment itself? Anything new, different?
In terms of sort of technology and stuff like that?
Yeah.
I hope very little, because I think people go to restaurants because they want to go to restaurants. They want to have hospitality. They want to have great food, great service, great environment. And I think if you chip away at that too much, you're not delivering the whole point of the visit. And very early in the crisis, when it looked as though we might have to do ordering from phones at tables, and there was going to be like a 2-meter barrier between staff and guests, and we were just appalled. We were thinking we just don't want to do that. We'd rather not trade than have that sort of environment. So I prefer innovation that is behind the scenes. So I love it if my businesses are as technical as possible, but you don't see it. I don't even like waiters and waitresses coming to the tables with handheld terminals. I mean, it happens in quite a few places inevitably now. I just think it cuts down on the human rationale for going to restaurants. And one of the biggest compliments that's been paid to several of the places I'm involved with that have come back post-crisis is that people have said, look, it was just so great. I didn't get served by somebody in a mask. I didn't get asked to clunk my details into a terminal before I made an order. It just felt like normal again. And I hope that what happens after this thing washes through is just a craving for normality again, and particularly in this sphere, in the sphere of hospitality, because when it's done well, it's just a brilliant experience, and it's why we all love going out for great meals and great drinks.
Let's talk about the gym business quick. There's a couple of people on the call that would be interested in this. Obviously, you're involved with Gymbox.
Yeah.
Gymbox has been quite controversial over the last couple of months, let's say. And actually, interesting, I know a couple of people who are a little bit irritated by Gymbox breaking ranks amongst the gym operators to actually call out the government and insist on opening anyway. Was it a bluff, or was it just about publicity, or would you have done it anyway?
Well, it was certainly born of immense frustration. So I'm chairman of Gymbox, and I'm also chair of a few restaurant businesses, and I could see the enormous contrast between how the hospitality sector was being treated by the government, which was frankly brilliantly, no doubt because it's a huge employer, and I think the penny finally dropped through this crisis quite how important the hospitality industry is to the UK in terms of tax, but also employment, particularly of young people. And I think that's the thing that terrified the government, is that if the hospitality industry had imploded, there would have been mass unemployment, particularly amongst young people. So let's not kid ourselves that the government's doing it for any other reason other than the fact that they kind of think about the consequences. So they threw enormous amounts of help at the hospitality sector, ranging from a clear opening program, which is the thing that you're referring to, but also VAT support, a VAT reduction, Eat Out to help out. And the gym sector was getting absolutely nothing. The same lobbying was going on through slightly different channels, different department, but just nothing in return. And also a whole load of messing around over the opening day. So, we had a board meeting on Gymbox, and we were just like, we can't go on just not knowing when we're going to reopen our business, because every week that goes by in a gym business, your members are wondering when you're coming back. And if the government are delaying you, they're almost implying that there's an extra health risk to gyms that there is to other things, which again, there's no remote scientific evidence for any of this stuff. It's just a whole load of experts kind of disagreeing with each other, and a bit of gut feel thrown in. So yeah, we were. I guess, would we have done it if we hadn't got a date? I don't know, but we were so frustrated that we felt we had to kind of turn the volume up on the problem. But we're still frustrated because the UK Active have been trying to get the fitness equivalent to Eat Out to help out, which is completely logical. You know, we've got to remind ourselves we're in the middle of a health crisis. The government should be helping gyms and the fitness sector because we know that obesity is a problem with this disease, as is several other conditions, and the gym sector should be protected as well. But there's not a lot of time, I'm afraid.
You know, a lot of people have drawn attention to the fact that on one hand, you know, there's a lot of health programs underway now to get people fit again, but
yeah,
at the same time they're encouraging people to go with an Eat Out to Help Out scheme at McDonald's and fast food chains. So
yeah,
there's a real tension there, isn't there?
There is, and I think, you know, I think the reason they, as I said before, the reason they ultimately supported the hospitality sector so much was all about the size of the sector and the employment risk.
Yeah, I mean, Gymbox, obviously, well, not obviously to everyone, but I mean, their locations are very much city centre based.
Yeah.
Again, versus a lot of the other gyms, which can be more sort of local.
Yeah.
I mean, what can you do until?
It's interesting. So we were, and we are, you know, concerned because of that. Yeah, exactly as you say. We're not exclusively city centre. We've got Stratford, Elephant and Castle, Ealing. So we've got some on the periphery of central, which are fine. But even the ones in the centre, we've been pleasantly surprised at the loyalty of the membership base and also the usage. And I think that what that tells me is that our membership demographic is relatively young, and that demographic is relatively unfussed about this at the moment. And again, I see that in some of the bar businesses I'm involved in. They're incredibly busy at the moment, and of course this seems to be playing out in the virus transmission at the moment. All the data seems to be saying it's young people who are passing this virus around at the moment. And again, is that surprising? You can only, you know, when I was in my 20s, I'm not sure I would have obeyed the first lockdown, let alone, you know, what's going on now. And I was frankly pretty amazed at how my kids did obey it. But I think that generation you can only tie down for so long. And so, yeah, we've been very, very happy as to how that has returned. But there's a big challenge ahead. Not least with our landlords, because gyms carry big square footage, big rents. And so we're looking for our landlords to be really helpful to us in terms of the recovery, which will probably take a couple of years to be fully back to normal for that business.
In that whole sector, people have got used to exercising in different ways.
Yeah.
With connected devices. Outside, you know, is how can a gym, I don't know, reformulate its offer to actually to win those people back?
Yeah, I mean, again, it's
cheap, are they?
Yeah, exactly. It's similar to the delivery thing in hospitality. It was happening anyway, clearly with Peloton and other things. Gymbox, we've developed our own product called Out of the Box, and that is available at the moment free to our members. So it's a home exercise program with live classes and recorded classes and expert-led tuition, and that is about to go live as a for sale product as well. So that will be available if you can be a member of the whole lot, or you can just be a member of the online platform as well. So yeah, we worked hard and fast at that to make sure that we had that as part of our repertoire.
Okay. I'm going to open up to, I mean, I actually have one more question before I invite other people to chat.
Sure.
CVAs, which,
Yeah.
you know, controversial, let's say. How do you think they've been used, and is it just the last option for a lot of fans out there just to pull that lever?
I think if you're in CVA territory, you're there for one of two reasons. You're either a company that was in trouble anyway. We talked about some of those earlier on, and you actually need to shed quite a lot of your estate. And CVA, if really you've got, let's say, 20 of your 80 leases are uneconomic, it's irresistible to do a CVA if the maths work, because you're just going to be able to lose commitments that you wouldn't otherwise be able to lose. So I think that's one category of company that does it. And I think there's other categories of companies that are very good companies that are trading really nicely. And this crisis has just led to an acute squeeze on their finances, and they need some structured support from their landlords and their creditors. And I think those CVAs are less aggressive. They're more consensual, and sometimes you can avoid the CVA completely just by being consensual with your landlords and consensual with your creditors. So I think it does have a role, unfortunately, in what's playing out.
Would anyone like to ask a question while we have Paul, either using the chat bar or myself?
What was the West Ham question? I'd love to talk about West Ham.
Hey Paul, it's Al. We sat next to each other at Balthazar's.
Oh, of course. That's how you know.
Yeah. And I just thought of you when they scraped through. That was really the question. It was actually more about, just knowing what you're doing with the gyms, as well as whether it will just follow a similar pattern to restaurants. I mean, will people be working out at home? Will they be using technology rather than going into gyms? And obviously, where does that leave you guys in terms of a proposition to get them coming back in? I
think it's very similar to hospitality in that when you go out to a great restaurant, you have a great service, you have a great meal, it all works. And if it's a bit rubbish, it doesn't. And I think gyms and fitness is the same. There's something that you can get from a visit to an outstanding gym, to an amazing class. You're probably familiar with Gym Box. We have amazing lighting. It's more like entering a nightclub than it is. And you're never going to replicate that in your kitchen or in your bedroom. So there will be a role for that and a convenience to being able to do it at home. But I genuinely believe on the rebound of all this, there's going to be a pent-up yearning for great stuff that involves doing it in third spaces with other people. But it will have to be really good. If it's average, then people will, realize themselves, why should I bother? Yeah,
totally. Okay, thanks.
But that will probably also be true of whether I return to West Ham. If they play deep football, which is remote prospect, I'll go back. Otherwise, I'll watch it on Sky.
Yeah, fair point. Thanks. That's really handy. Cheers.
Would anyone else like to ask a question? Maybe we've answered everything.
Jim, can I ask you a question? What are you seeing amongst your clients? I know you have a very broad range of clients, but are there kind of broad themes of strategy developing from a brand point of view?
Yeah, I mean, at the moment we're seeing a lot of interest in direct consumer channels, pivoting towards that. Whether that's brands that have traditionally gone through wholesale or are trying to rebalance their distribution themselves across retail and direct. And then one of the challenges of that is that their knowledge isn't necessarily there, so they become more reliant on external agencies to sort of help them and support them in that. We've got some clients that have just had a very successful few months, depending on which category you're actually in. So, we've been onboarding a lot of clients onto new channels like Amazon over the last few months, across all different categories, from fragrances to toys to fitness products as well. So I think it's been a bit of a mixed bag. I think there's a lot of nervousness now going into Christmas. Christmas needs to be as successful as it can be. And it's interesting that John Lewis has gone very early. They've opened their Christmas shop, I think, just last week.
Oh, really? Wow.
So yeah, I think, and then there's the big sort of mega sales days now, like Black Friday and Prime Day, become more and more important. That's sort of starting gun for the sort of the festive season and gifting and shopping. So yeah, a lot of nervousness and you know, even though some of our clients' e-com has done very well, the overall contribution towards revenues overall are down. So we've had some clients who their e-com might contribute 20% of the overall sales revenue that went up to 100%. It's gone back down to 50%.
Yeah.
And they've been given more and more sort of high targets to hit as a contribution, but not necessarily the budget to be able to do that. But you know, all of a sudden, a lot of board level members are more interested in e-commerce than they ever were before. But I think you know, the next few months are going to be absolutely critical, and everything we're doing at the moment is trying to provide as much agility in our planning as possible to not be locked into different things if should problems arise.
Yeah.
For 2-3 months. And beyond that, to be honest, there's not a lot of chat, I would say. Let's just make Christmas as big a success as possible.
Yeah. Yeah, I certainly agree with you on the agility point. It's who knows really how this goes in the next few months.
Oh, I've had a really long question from Will. Will, do you want to ask the question rather than me read that out?
Hi, hello. Hi, if you can hear me. Hi. I just back to the sort of evolution, if you will, of restaurant businesses and those, if you might characterise them as, say, you know, the good Italian chains that worked in kind of F&B and shopping centre locations, both sort of city centre and regionally, probably, let's say, 10, 15 years ago. Then there was the kind of burger revolution of kind of GBK and Byron and operators like that, which, you know, they were the absolute sort of darlings of the dining out world, say, 5 years ago, and then have been through quite a lot of transformational changes and have seemed to have suffered quite a lot. And then obviously with Richard Caring doing Coat and then rolling that out to private equity, and they then massively expanded. You know, whilst I think there are sort of different reasons for all of the successes and then possible failures after those, how would you compare those to businesses which are, if not thriving, still doing well, are steady, are maintaining their locations all right? You know, is it simply a balance sheet thing and people not overreaching on rents and you know, is it only private equity to blame because they're just kind of greedily rolling these things out without a...
Yeah, no, I mean, it's a brilliant question, because that has been the overwhelming trend, hasn't it? We've seen these businesses get bigger but get worse at the same time, which I think is a really horrible trend for any business, because what you're doing, particularly if you're a restaurant business, is you're increasing your operational leverage, not just your balance sheet position, so you're borrowing money to expand, but every time you sign a lease, you're signing a massive financial commitment.
Yeah.
And we have a saying, which is, in the restaurant business, you can change everything apart from the lease. So once you sign that lease, you are committed to, well, apart from a CVA.
Would you say turnover rents are probably going to become more prevalent? And I mean, are you a backer of turnover rents?
I think you've got to be careful what you wish for in this world, generally. And turnover rents are obviously great at the moment when everybody's turnover is low and everybody's pessimistic. But if there's a rebound, which I think there will be in certain areas, and you've signed up you've switched to a turnover rent, unless you've got a cap on it.
Yeah, quite. Yeah.
You can find yourself paying a disproportionate amount to landlord.
Yeah.
So I think it's a case by case thing. But I think your observation, you know, is spot on. And I think the problem is, as each of those businesses got bigger, they didn't invest enough in the product. In fact, they probably invested less in the product. And it's very simple with restaurants. You know, if you drop the quality of the ingredients, or you drop the amount you spend on training, or you spend less on the fit out, then it adds up to a much worse experience for your customer. And if you do that at the same time as you're expanding, and perhaps you're expanding too fast, so you start taking marginal locations. So, you know, on my boards, you know, we are incredibly careful about committing to new properties. We love to expand, but we are so careful about what we sign up to. And I used to own GBK years ago when hopefully it was in that darling phase. I bought it from the founders and expanded it to about 50 before we sold it to Nando's. And it's hard to think now, but you know, there weren't many gourmet burger things around at the time.
I remember it well. I got fatter.
We were the only one for a while, and then Byron came along, and of course there's loads now. So that's the other thing that happens in this sector, is you get an enormous amount of imitation. And if something looks good and it looks like somebody's making good returns out of it, then other people get into it as well. So you've got to keep an eye on the competition all the time.
Yeah. So whilst chains like Nando's are deemed to be a sort of success story of the high street, would you say that is just sheer demand of their product and they haven't dropped the quality, or is it, you know, they've got very deep pockets, or
no? I think
they've been more organic in their growth and just haven't overexpanded? I
think it's a brilliantly run business, even though it's big. I think it's a really good example of a business that's big and still very, very good.
Yeah.
And I know the owners of that business, and they are deep pocketed, but you know, they're not a charity. It's a very, very successful business financially, but they spend an enormous amount on training. I think the product is good, particularly at its price point. I think it's I don't know what you know, you're the marketing experts, but I think their brand position is great as far as I can see. They seem to have a very clear idea of what they are and who they appeal to. So I think they're a really good example of a business that's grown and probably got better as it's grown.
Yeah.
You like their branding, Jim? Nando's?
Nando's?
Yeah.
Yeah.
I mean, we're not target market, but
yeah, I do like Nando's. I don't go that often.
Yeah.
I'm waiting for my kids to get a bit older so they can go.
Yeah. Well, my kids are obsessed with them.
Yeah. Well, if anyone is that it for everybody today? Now's your chance to chat to one of the best-known retail investors. But thank you very much for coming. Really appreciate you taking the time this morning. And also,
I have a question, Jack. Sorry, I also typed a great big long essay here. Vanessa here.
Oh, sorry,
Paul,
Vanessa.
Yeah, Paul. I'm from Nando's country. I lived in South Africa for the last 25 years, and everyone's really good at cooking from home. It was, you know, it's been a thing there for longer. So I was inspired by what you said about. And I'm thinking, is it possible to have a fusion which takes account of people's newfound ability to cook for themselves and source ingredients? And some of the ideas I had were, you know, sort of teppanyaki style, where you're more involved in the cooking because it's taking place at your table. Master classes, you know, demonstrations at restaurants where people get to see behind the scenes. You know, exploiting the popularity of things like MasterChef, where you give away a few of your restaurant secrets, but you're involving your customers in the process. Is there any room for that, do you think? I
think there is, and there are a few places around that do that sort of thing. It would then be more experiential, wouldn't it? So it's not just going out and being served with a meal. And certainly that was a big trend pre-crisis towards experiential socializing, and I don't think that has disappeared. I think that will come back. So yeah, I could see places springing up that do that sort of thing.
Cool.
Sorry, Vanessa, for
no.
Have an eye on the Zoom chat bar. I was halfway through my wrap up. But
sorry.
Okay. Thank you very much. Going. No more. Okay. Well, thank you so much, Paul. We'll make the recording available on demand through our channels over the next few days. But thanks for taking the time to share your thoughts with us today. And have a good day, everybody.
Have good days.
Cheers. Thanks, Paul. Nice.